In today's combination tutorial and web lesson, I'm going to be covering stats that matter. This is a trading tool that I've developed over the years to help monitor my profitability and my performance. And while there are many statistics out there are a few components that you absolutely must monitor, and we're going to cover those today. As with all my trading tools, one of the most important things is to read the disclaimer first. These tools are for educational purposes only. They are beta versions and still under development, and so if you use them, you do so at your own risk. That said, I have made every effort possible to make sure they're accurate and error-free. You can see we have 4 tabs within this spreadsheet. The first is trades. You want to enter your trades here. You can enter up to 5,000 trades, which is usually more than enough for most traders. Very simple information: the date, the number of shares, the ticker, whether you went long or short, your entry price, your exit price, and your stop size. So if you risked $1, you put $1 in. If you risked 50 cents per share, you put in 50 cents, and then your fees. And the rest is calculated for you. All the cells you don't put data into are locked to protect the formulas. Anywhere you see blue font is where you would put data. I'm going to go ahead and populate this with some sample data just so you can get an idea of the kind of information that it tracks. One thing I would like to point out is whenever you see a red box with a white asterisk in it, click on it and you'll see a little pop-up. Any page that has this provides additional information and guidance on how to use the sheet and what to focus on. You always need to know what your average win rate is. You also need to know what your average risk-reward ratio is over a series of trades or time. And you want to make sure you never let your average loss exceed your average gain, or an individual loss exceed your average loss or your average gain. Next, we hop over to the data summary sheet, and this is where you get a lot of really good information. On this page, you see there's another note telling you what the page does and highlighting a few important key points. This page gets weekly and monthly statistics. It's fully automated. You can type the year in if you wish, and you can also change the ending date on February, since from time to time leap year occurs and you may need to change the date on that. It'll tally your total number of trades, the number that was profitable and unprofitable, giving you your win-loss ratio. So in January, 45% of your trades were profitable and 55% were unprofitable. That's your win-loss ratio. Then we have total shares traded. That can be helpful in identifying whether you're over-trading or exceeding your risk. If you notice a big jump in shares, especially during weak performance or underperformance, you can see the number of winning shares versus losing shares. Next up, we have your average reward and your average loss per share, and then the average reward in a dollar amount. The next column calculates what your average risk-reward ratio is over that series of trades for any given month or week. The first column is your gross P&L, risk-reward, and then the second is your net. It also tallies up total profits, total losses, gross P&L, all fees for that time period, and then finally your net profit loss. You might ask, well, this data and this information is nice, but what do I do with it? How do I use it to improve my trading or to know where I stand as a trader? You take this information, your percent profitable and unprofitable, and your average risk reward. Both these, you can see the heading is gold or yellow, and those are the two numbers that you want to pay attention to. So in January, your profitable win-loss ratio is 45%, and you had a risk-reward ratio of around 2. So you come over here to the risk-reward ratio chart and you plug those numbers in. First thing you do with the little risk-reward chartlet is you find your reward. Well, you risk 1, and on average your reward is 2. That information was in this column. So that is the chartlet that you'll be looking at. The next thing is you look at your win-loss ratio. Your win ratio was 45%. So that puts you between these two numbers and gives you a very quick idea of what you can expect from your trading over a series of 10 trades. This is a very simple way to track your performance that gives you tangible information to help you understand your current performance. It can help you identify if you've been over trading. For example, on average, you can see January through December, the average trades was around 20. Every trader has a sweet spot. You can undertrade and you can overtrade. And the idea is to monitor your performance so you can see the impact of over and under trading on your performance. Also in the data summary section, you have the annual statistics that give you the stats for the year and how you performed. You can also break that down on a week-by-week basis if you want to monitor your performance more closely. You can clearly see that in the first 2 weeks, this trader overtraded when you compare it against their average trade numbers. When you look at the weekly data, you can use it to help you set performance goals for the next week. You can use it to help you identify underperformance and take corrective action. You'll notice that on the first week, it's in blue. That's because from year to year, the first day of the week changes. So what you want to do is you want to find the date for the very first day of the week, being a Monday in January, and the ending date on the first week, which would be a Friday. Once you punch those 2 dates in, the following dates are automatically calculated through the end of the year. You can see that there's a lot of data or a lot of statistics that I don't track, and the reason I don't is because they're not nearly as important in predicting profitability. So as you can see, we only track a few important statistics, the ones that matter. So many traders spend so much time doing things that have absolutely nothing to do with improving their trading performance. Tracking these statistics offers extremely important insight. You need to know if you're profitable over a series of trades, and if you're not, you need to understand where you might be able to improve your performance. Let's go back to our example before. Now, if you want to improve your profitability, there's 2 ways that you can do it. You can either increase your reward. Perhaps you have a tendency to choke the trade. You get out of the trade too soon and it keeps going without you. If you can find a way to stay in a winning trade, stay in a trend that's going in your favor for longer, you can increase the risk-reward ratio. So in this example, if you had a 50% win rate with a reward of 3, just bumping up your reward by not choking the trade to an average reward ratio of 4, you would go from a $1,000 profit over a series of 10 trades, risking $100 per trade, into the next chartlet, up to $1,500. That's a very significant increase, especially over many, many trades. Another thing that you can do is you can try to reduce your number of losses. That can be done by refining your ability to assess probability of a trade. It might include something simple as not getting in early, actually waiting for the proper entry trigger or signals before you get in. By simply having one less losing trade, that can also improve your performance. Back to the risk-reward ratio of 3. Just by having one extra winning trade, you go from $1,500 minus the $500 loss for $1,000. Now you go to $1,800 minus $400, giving you a $1,400 profit instead of a $1,000 profit. And over a series of trades, that can add up and be a huge impact on your bottom line. So it's not enough just to track data. You want to track data that matters, and then you need to be able to translate that into a plan of action to improve your performance. Typically that involves either taking higher probability trades, thus reducing your number of losses, or letting your winners run longer so that you can have a higher reward ratio. The truth of the matter with trading, you can really only control the severity of your losses and to some extent the frequency of your losses with your strategy. And then if you're in a profitable trade, making sure that you get as much of the run as you possibly can. This is a trading tool that I use and I share with other traders that I coach and mentor. Whether you choose to use the same tools that I do or not isn't the point, so much as you need to monitor and track your performance, and you need to be able to translate it into an actionable plan to help you improve your trading. So that's it for today. Thanks for watching. Good fills, everyone.